First question, Katie, to you and these levels and the pullback that we're seeing. Anything particularly stand out to you in terms of trying to decide if this is just a one-day move or not?
Yeah, I think it's probably more than a one-day move, but we're not seeing a lot of breakdowns with this pullback, which I think we should really just look at as a retracement of where we've come from. When I looked at the S&P going back to that late July low, it was up nearly 6%. So some kind of retracement is very natural once you've had overbought conditions in place for some time. So I just simply think we're seeing a reaction to those overbought conditions via a loss of short-term momentum. We do expect a test of the 50-day moving averages by both the S&P 500 and the Nasdaq 100. They're just over 2% below current levels before this pullback matures.
The data in the last, 24, 48 hours, Greg, has been a little bit weaker. Retail sales today, home builder sentiment, which we'll talk about, the consumer sentiment number last week. Anything giving you cause for concern amid the booming economy otherwise?
Well, with the consumer, we have to wait a bit, right? So the drop to 1.1% was somewhat to be expected as we rolled off of Amazon Prime Day and as physical stimulus put up diminishing returns. The University of Michigan study was a bit more alarming, going to a low we haven't seen at 70.2 since 2011. But that's a sentiment-driven measure, and sentiment sometimes gives us head fakes. And so it bears some watching. Certainly the Delta hasn't proven to be deleterious to the labor market. We saw two pandemic-level lows the last couple of weeks in 385,000 jobless claims and then 365,000 jobless claims. So it certainly hasn't proven to be a headwind for the labor market, which I think the Fed will have to take notice of. We still have 10 million openings last month and only 9.2 million people who are either underemployed or looking for employment. So it's become very difficult for them to present the argument that we need to keep easy monetary policy in order to for the health of the labor market. That's a very difficult argument to make now.